Now, people create content for all kinds of reasons. Some say it's about self-expression, others do it out of boredom, and of course many chase the money or even the fame. And that's all true, but as a bookkeeper, I see another side to it, one that rarely gets talked about. People also create content because of the tax savings. That's right, tax deductions can be one of the biggest hidden motivators behind why turning your hobby into content creation actually makes sense financially. Let me explain. I work with business owners and creators every day, and here's the difference I notice. A normal W-2 employee spends money, and that's it. The money's gone. But when you're self-employed or running a content channel, many of those same purchases can legally become business write-offs. So, while some people think of content as just an outlet or a way to go viral, I think about it as a gateway into the business world of tax deductions, where even everyday expenses can suddenly save you money at tax time. So in the video, he talked about how chasing money can feel stagnant and creators start looking for other ways to make income. But here's the thing. Tax savings are another form of income because every dollar you deduct is a dollar you keep. So here's what I mean. Let's take something simple like your phone. If you're a W-2 employee and you buy the newest iPhone, you just swipe your card and that money is gone. But as a content creator, that same phone can become a business tool. It's your camera, it's your editing station, it's your marketing device, even the hub where you answer emails and connect with your audience. Suddenly, that $1,000 purchase can be written off as a business expense. Okay, what about your Wi-Fi bill, your internet bill, your electricity bill? For most employees, it's just another monthly cost. But for content creators, a portion of it is actually deductible because it directly supports your content production. Even the software you subscribe to, like editing apps or Canva or Adobe or QuickBooks, those aren't just bills anymore. They're legitimate business deductions that can lower your taxable income. In the video, he also mentioned that many 9-to-5 employees feel stuck, but that's the beauty of content creation. It doesn't just open up new income streams, it changes how your lifestyle expenses are treated. So what used to be personal spending can suddenly become tax advantaged. Take vacations, for example. Most people, flights, hotels, meals, none of this is deductible. But if you're a content creator and you film while you travel, that trip just became a business activity. Suddenly airfare, lodging, even part of your meals can qualify as a business travel expense. Same thing with eating out. If you're discussing video ideas or collaborations or strategy over lunch, that's a business meal, and business meals are 50% deductible. So things that used to be personal spending, like trips and lunches and cars, because they're pursuit of income, they now become part of your business strategy once you're creating content. So while others see content as just creativity, creators are also lowering their taxes by turning everyday spending into business deductions. The truth is, content creation isn't just about income. It's about keeping more of what you earn, and perhaps even lowering your taxable W-2 income. So if you're a YouTube content creator and you want to make sure that you're maximizing your deductions the right way, then click the link below. We can set up a 15-minute conversation, and I can see what I can do for you. I'd love to be your YouTube bookkeeper. Let's make your creativity pay off. Now, in the video, he does bring up a great point about marketing being all about maximizing for the algorithm. Well, in the same way, creators can maximize their tax position. It's not just about views, it's about structuring your finances so the system works for you, not against you. So let's look at the big picture. When we talk about why people create content, money always comes up. But it's not just about how much you earn, it's also about how much you keep. A regular 9-to-5 employee doesn't have access to the same tax code benefits that creators do. They spend after-tax dollars on their phone and their car and their vacations and their internet bill and their Wi-Fi bill. But as a self-employed creator, you get to flip that around. Those same expenses can reduce your taxable income. That's huge because the real motivator for many creators isn't just building an audience or chasing viral views. It's the fact that content creation opens the door to live like a business, and businesses get rewarded in the tax system. So I agree that self-expression and fun and fame are all valid reasons why people create, but there's a hidden one nobody talks about, the tax savings. And for a lot of creators, that's just as powerful, if not more, than the number of views they get on a video. In the video, I liked how he said that this channel is just an outlet for him, not the center of his being. That's exactly how taxes should work too. They should support your creativity, not control it. As long as your deductions are ordinary and necessary, you get to focus on creating while saving money in the process. At the end of the day, content creation isn't just about self-expression or fun or chasing views. It's also a smart way to unlock tax savings. The difference between a W-2 employee and a self-employed content creator often comes down to one thing: tax deductions. If you're creating content, don't leave money on the table, Track your expenses, keep your receipts, and take advantage of the tax benefits and treat it like a real business. And if you want help making sure that you're maximizing your deductions the right way, I'd love to be your YouTube bookkeeper. Just click the link below and we can set up a 15-minute conversation and I can see what I can do for you. Reach out, let's talk, and let's make your creativity pay off at tax time.